I'm going to make an investment this week that I believe is going to be the most important investment in my life, not by the amount that it's going to return, but instead by the culmination of all the knowledge that I've accumulated over the last 63 years, and most importantly, the knowledge that I've accumulated since I started this YouTube channel. And what I'm going to do is I'm going to short the Chinese economy. I believe I've learned so much from the dot-com bubbles, from the subprime crisis, and now what I'm going to call the China bubble, that this is an investment I have to make because I think I'm ahead of the game on it, and I want to prove to myself more than anyone else, and I want to bring the members of my tribe into this knowledge base that I've accumulated, and what I think I've found, much as Michael Burry discovered the subprime crisis before anybody else did. I think there's some of us YouTubers who have discovered something, and now I think I figured out how to make an investment to capitalize on the meltdown of the Chinese economy. Stick with me. This will be interesting.
Best of Us Investors presents Kerry Griegmeier.
Made the first version of this video yesterday, had it all edited, put up, ready to run this morning. And yesterday when I thought about it, before it went, I said, no, I'm not going to do that. I have a principle that I don't spend money that I don't have, and I don't buy stocks on margin. And what I had intended to do was use an ETF with that shorted China, and it was a 3X. I had criticized another YouTuber about a year and a half ago for advising people to use the S&P 500 3X as the market was going up. And I said that was irresponsible. And there I was, ready to put a video up to say I'm going to 3X short China. And it was, I had mentioned it in another video. And one of my tribe members wrote me and said there's the decay factor, and that is that they're in these 3X, in these leveraged videos, they basically close their positions out every day, and you absorb the fees of that within the management fees of the video. And I said, no, I can't run that video. So what I'm going to do is I'm going to share with you on a 1X. That is that it's still a video or still a ETF that it closes out because it's done on futures contracts, but I'm not going to use leverage. It's going to limit the amount of return that I believe I would have gotten in the 3X. But again, I'm going to hold to my principles. So what I want to do is I created a chart to show you these ETFs and how they move and how they function. And the whole premise is based on that I think that the Chinese economy is going to melt down. I think they are just exactly what happened in the dot-com bubble. They overbuilt, they overvalued, they used funny money, much as happened in our real estate crisis. And China's economy is so unique. I've only seen it one other time, and that was in Cuba. It's a closed economy. It's like the guy in Cuba, our guide said, he said, if I had a bushel basket of Cuban pesos, it wouldn't buy me a Snickers bar anywhere other than Cuba. And that's and it struck me, that's exactly what the Chinese yuan is. It is a closed currency. China finances itself basically off of the debt that we owe them. So when they want to buy oil, they can't buy it with yuan, or when they want to buy wheat from Ukraine, they can't buy it from yuan. They have to have American dollars. And because we buy so much stuff from them and run a trade deficit with them, they merely need to come to the Treasury window of the United States Treasury and say, give us some of our money that you owe us so we can buy our grain and our oil. Well, as we're deglobalizing and we're not buying as much from China, in fact, our trade deficit went down for the first time in 26 years just this last May. As we're deglobalizing and we're pulling away from China, they aren't going to have the American dollars in the future to buy what they need. Then you add to that the demographic problems that they have, and the issues of the real estate crisis that they're having. They can't survive. It was first brought to my attention in this book that Peter Zeon put out, and how the demographic issues and the financial issues, the closed economy will not allow them to function anymore. So I want to take you to the chart to show you how I'm going to short it, and it's not going to be a big payoff, or I don't know what it will be, because we have never experienced a total close down of an economy. What is the inverse of an economy that has grown over the past 40 years to the second largest economy, when all of a sudden they're worth nothing? I don't know, but I'm going to put $14,000 inside of a Roth IRA, and I'm going to find out. So let's take a look at this chart and see if it's not something that maybe you want to get involved in. Okay, this is the chart I've made on TradingViews. Honestly, don't see how anybody can be a trader or an investor and not use charts, and TradingView is my fallback. There's a affiliate link in the description if you so choose. What I've done here is created a chart on the movement of the Chinese market, and I did it on some ETFs. These ETFs didn't really become available until 2010, and what they are is the use of futures contracts, and a futures contract is a whole nother ball of wax that we'll talk about on another day. But they close out every day, so there is some volatility, there is some risk. But I think this whole concept is so one and done that I want to get involved in it. What I'm showing you here is the CHIX, that's a ticker for it, and that is a 1X. So for every dollar I invest, I get $1 of exposure. And it's currently trading at $12.01. This is its movement since 2010. Now, the inverse of that, and that would be the 1X bear movement, that's the YXI, is shown here. And what I then did was I see all these gyrations, and relative to an economy that I know is growing over the years, and I asked myself, why did it move up and down when I just thought China was just growing? And so what I did was I went and researched and found out what was the growth rate on these spikes. What was causing these spikes? And as I see here, in October of 2010, the Chinese economy grew by 10.6%. That's astronomical. Our economy, we shoot for maybe a 2 or 3% growth in GDP. And as you can see, then here in 12, it went down, but still was at 7%. Then you see this spike here that we really don't have any explanation for other than maybe the government manipulating the economy. Because then very shortly in 2016, you see this drastic drop. Well, this is the first time that there was any rumors about maybe China's overbuilding their market. And there was it showed the slowest growth in 26 years, down 7%. But what the news I found was saying was this was the first inclination that maybe they were building too many buildings and too many shopping centers and that the economy couldn't support it. But then again, through manipulation of the economy, it shot right back up. In fact, it went up from 16 to the beginning of 18, it went up 95%. That's the bull market of the Chinese ETF. Then again, you start to see a decline in the growth rate of China, and it's now projected for this year to be down to 4.3%, which is quite respectable, but relatively it's not. So then this red line is the YXI, and what that is a 1-year bear. And what I wanted to illustrate is they do move in opposition to each other. So if I believe that the Chinese market is going to collapse, and it's represented by CHIX at $12.01 a share, I've got to believe it's going to come down to here. It's going to come way down here, and the 1-year bear is going to come way up here. Now, what I'm troubled about, and I have yet to figure out, is if the bear is currently selling at $18 and the bull basically collapses, what does that go to? I don't know. And the reason I don't know is this has never happened before. Yeah, we had a subprime crisis, and yeah, we saw a 80% drop in some of our indices, but I don't know what it would go to. Am I confident it would double? Yeah, I'm quite confident it would double, but I don't know how far it would go. And the other thing I don't know is how long will it take? There's some issues here that could speed it up substantially. Let's assume that China knows this is going to happen. They know they have a closed economy. They know that they have a real estate market that people are running on their banks. They know that the contractors can't pay the banks back for the loans that they've taken out. They know that there are hundreds of thousands of empty housing units in what we would call high-rise apartments or condos that are never going to be occupied and will probably have to be torn down at an expense. They know that's going to be happen, and they know that that's going to reach into the coffers of J.P. Morgan and BlackRock and Bank of America and Wells Fargo, and they know it's going to have an effect. Whether they care, I don't know. I don't know what's going to happen. I really don't. But at the other time, I know this red line's going to go up. And as I said in the intro, this has a lot more to do with Kerry's feeling good about what he's learned and what he's absorbed and what he's continuing to absorb. I was going to do the 3X. That's this here. And I want to show you what the opposite of the 3X is. This yellow line then represents the bull market on the Chinese economy. And you can see it just gyrated all over the place. And you didn't see equal gyrations on the bear side of it. And this is what really kind of scared me away from this 3X. It's basically saying the market isn't acting proportionately on the bear side as it is on the bull side. And I think this probably has a lot to do with the Chinese government's ability to manipulate the market. So that's what, again, scared me away from the 3X, as well as my conviction that I don't spend money that I don't have and I don't buy on margin. I'm not the only person who has recognized this. There are some very highly respected YouTubers, here they are, that recognize this as I have. They're better presenters than I am, and so I want you to look at their videos. I also want you to educate yourself, and I want you to read some books. The first one being that of Peter Zeon's Superpowers, The Accidental Superpower, and then this one. This one, either of them, I can get you a free copy if you'll go to the link below, where I'll send you a link to Audible. And if you aren't a member of Audible, you can sign up and get your first book free. Then from there, if you want to understand how a Wall Street economy can ignore something like this and not take action and not alert you to it, read Michael Lewis's The Big Short, which tells you about how the subprime crisis of 2008 through 2010 occurred, and then watch the movie as well, the Big Short, which goes into Michael Berry's recognition of something that Wall Street would not acknowledge, didn't have time to acknowledge. And that's what I think is the crazy thing about what's happening in China. There's about 6 of us YouTubers who have recognized this and said, hey, this is going to happen. And as I say, they do a tremendous job of presenting it. So go into the description and you'll find the links. In fact, I've put together a PDF of a bunch of stuff relative to this that I'll share with you in the description as well. Back in October of 1963, when I had to get a B on my final exam of my economics class and Mrs. Wilson's class in order to stay in school because my other grades were so bad. And I did. I got the B in the class, and it motivated me to work harder and get through college. And I realized just today that what I'm doing and the investment I'm going to make and the short that I'm going to do, I've never shorted anything before in my life, is the accumulation of 63 years of knowledge about the investment markets that started with that economics class in 1963. And I wanted to share that with you because I'm proud of it. I'm proud of the mark that I have made and the knowledge that I'm sharing. And I want to ask you to share this video with other people so that they can learn more about. And then I want to ask you to join our Discord and come and bring your knowledge to our little tribe of people and see if we can't help each other become more successful at investing and then, in essence, change our lives. That's what this channel, Best of Us Investors, is all about.